Good afternoon, YouTubers. Benjamin Youngman here with my stock picks for January 2019. I apologise for not doing a video in December. I was in the middle of moving house among doing the Christmas and festive things. Quite busy. Moving house mainly was the main reason I couldn't do a video last month. January, I'm going to do two stock picks for January 2019. Try and catch up on missing out on last month. And there's a lot of good stocks to buy at the moment. I think if you're in for the long game, any information in this video is not financial advice. Don't pick a stock because I pick a stock or because I think it's a good company. These are not recommendations. This is not considered financial advice. Please rely upon your own inquiries, do your own research, do your own homework, and make your own decisions based on your own goals. Okay, now first stock, BlueScope Steel, ticker code BSL, BlueScope Steel Limited, ranked at number 64 in the Australian stock market with a market cap of $6.5 billion. BlueScope Steel Limited is a flat steel producer and supplier of steel products and solutions focused on the global building and construction markets. It operates in Australia, North America, China, Indonesia, India, Vietnam, Malaysia, and Thailand. Okay, BlueScope Steel currently has a share price of $12.18. It hit a peak back in July 2018 of about $18.83. Since then, it hasn't done too well over the last 6 or 7 months. It's gone down quite significantly to the point in December it was under $11. It's now bounced back up to $12.18. The company is doing quite well. I think a lot of the trade talks between China and the US have scared a lot of people out of the resource sector. BlueScope Steel as a company is doing quite well. The PE ratio is only 4.3, so it's probably a little bit underappreciated by the market. Back in late 2018, with the annual report, BlueScope reported an underlying earnings of $1.27 billion, up 15% on the prior calendar year, an underlying net profit after tax of $826 million. Their balance sheet was in good shape back in last reporting season, 5 months ago now. The balance sheet reaching $63.6 million as a net cash position, which had improved from $262.1 million net debt the prior calendar year. So yeah, there you go, about 15% growth on the underlying earnings and a net cash position. They're growing quite well. They're Australia's largest steel manufacturer, and they're New Zealand's only steel manufacturer. As I said, $12.18, probably a bit underappreciated by the market at the moment. Low PE ratio. Negatives, very low dividend, a gross up dividend of about 1.18%. So not much for in the way of cash flow there. But I mean, the capital gain could be quite significant over the next few years for BlueScope Steel. They're on a good track. That's my first pick, BlueScope Steel, ticker code BSL. Moving on to my next pick is in the healthcare sector, and I'm looking at Sonic Healthcare with a market cap of $10 billion, ticker code SHL. Sonic Healthcare is ranked 41 on the Australian stock market. I'll give you a company overview. Sonic Healthcare Limited is an international medical diagnostics company offering laboratory, medicine, pathology, and radiology services to the medical community. The company is structured as a decentralized federation of medically led diagnostic practices with the head office in Sydney, Australia. Sonic Healthcare provides the services and infrastructure in 8 countries: Australia, New Zealand, the UK, Germany, Switzerland, Belgium, Ireland, and the USA. Now, Sonic Healthcare, again, back in July last year, was trading at back in August last year, was trading at almost $27, $26.78. It's dipped down to $21.95 it currently sits at. So again, over the last 6-7 months, this stock hasn't performed too well. The PE ratio is 19.5, so not incredibly cheap though for the healthcare sector. That is not high by comparison. Sonic Healthcare has a gross up dividend of 4.1%, so one of the better dividend paying stocks again in the healthcare sector. Not necessarily one of the market darlings, Sonic Healthcare, compared to say Cochlear or CSL, which are trading at a much higher multiple and pay a very low dividend. So I think there's some good gains to be had from Sonic Healthcare as well as having a good dividend. So you kind of get the best of both worlds in that regard. Now, Sonic Healthcare full year statutory accounts as of 30th of June last year. Sonic Healthcare had revenues of $5.5 billion, up from $5.1 billion the year before. Net profit after tax of $475 million last financial year, which was up from $427 million the year before. Net cash flow from operations, $767 million. And their dividend payout ratio is 69.1%. So quite generous on the dividend once again. A little bit about Sonic Healthcare. Their latest acquisition. So Sonic has entered into a binding agreement to acquire Aurora Diagnostics for Australian $750 million, which is an implied acquisition multiple of 9.2 times pro forma earnings. Aurora is one of the leading anatomical pathology providers in the US. It operates 32 pathology practices with over 1,200 staff, including 220 pathologists. Serves 23,000 physicians and more than 100 hospital contracts with practices in 19 US states. So this is a big acquisition for Sonic Healthcare. This could be game-changing for the company. Big acquisition, lots of growth ahead for Sonic Healthcare. Again, do your own research into Sonic Healthcare, see what you think. Healthcare as a sector over the last 10 or 11 years has outperformed any other sector on the Australian stock market as a whole at around 230 to 250% growth as a sector. So finding the good companies in the healthcare sector is a good way to keep part of your stock defensive. I think Sonic Healthcare has a lot going for it, more upside than downside, in my opinion. That's just my opinion. I think over the next couple of years, this could be a real good stock to have in your portfolio. Again, these picks are more for the long game, not the short game. If you're a day trader, these videos are really not for you. These are for the trader who wants to sort of hold for 3, 4, 5 years or more and keep an eye on the market over the cycle. They're my picks: BlueScope Steel and Sonic Healthcare. I hope you enjoyed the video. If there's anything I've missed, feel free to ask questions. I think I've got about 10 subscribers, so I'm killing it. I'm big time. Just joking. Those who are watching, thanks. I hope you enjoy the picks. And let's see how these things perform over the next 12 to 24 months. I'll do a recap video 1 year on with each stock to see how it's traveling, and again sort of annually to see if they're performing as per expected. Enjoy, and thanks for watching.